Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. Paris milling wheat. After the market created a cusp back in late May, we had the resultant break higher, something I'd cautioned about back then. Prices rose and fell through stratified layers of support and resistance. Some of them seemed then and still seem quite dense, such as the congestion area overhead now, the resistance that we sit just beneath, which is between 238 to 242, and that's containing the March 2013 high at 240, the short medium moving average currently just below it at 236, and the medium moving average, which is right in at 239. The market pushed down through this 238-242 congestion mid-November and dropped all the way down to the same low as we saw in May at 221, my apologies, before reverting back up. As part of this move low, I would like to again discuss some previously mentioned big picture items. Firstly, this market is still well within the big bear channel, currently 253 to well off the bottom of my daily chart, highlighted in dark blue on my daily chart, and originating from October 2022. That's well over a year ago. Secondly, I've studied the more recent action in greater depth over the past few weeks, especially since early September. I originally saw the opportunity for a possible sideways triangle with the upper trend line highlighted in bright red, currently at 239. Originally just above the medium moving average, currently 239. Just above the medium moving average at 239. But now partnered with it, if a little below right now. In that time, it's changed its shape, though not its nature. It is still a triangle, but now a descending triangle, currently 233 to 239. In November, we had a break lower, and I laid out some targets below for such a pattern. Thus, primary target was in the 227 zone, whilst the harder to reach secondary target X1 is in the 220 zone below, just under the May 2023 low. An even more recent study of this market revealed what I can suppose only be described as a head and shoulders pattern in the wrong place. However, much like a cat's ears pattern is a version of a double top in a descending market, this head and shoulders top is still there, but in a descending market, formed between June to November with a neckline currently at 233, and entwining right now with the lower trend line of the descending triangle. Whilst I may not necessarily be comfortable with this head and shoulder pattern, I still feel obliged to indicate potentials for the pattern below. Thus, a primary target X2 is in the 215 zone, a secondary, harder to reach target X3, down below the bottom of my daily chart in the 197 zone. I am not going to comment on these any further at this time. London UK feed wheat. The move higher from the May to July double bottom pattern reached its climax in mid to late July with a combination of an island top that was also part of a small double top, an Adam and Eve type. Since then, prices moved lower. The short medium moving average, currently at 186.60, tried, not wholly successfully, to act as a sort of cap on any rises, and the medium moving average, currently 189.50, has moved from being a market attractor to being a cap on recent attempts higher. Interesting, one of the key features here, and it is a surprising feature, has been the neckline, highlighted in dark blue on my daily chart, currently at 185.15. And that's of the May to June reverse head and shoulders bottom, acting as a pretty reasonable support, though I suspect in the background the September 2021 low at 181.70, perhaps more importantly the 50% Fibonacci line, absolute Fibonacci line, at 180.5 have helped in the past to prop up prices. This situation, I suspect, is not destined to last, designed to last even. It's coming in from above. We have the declining long moving average, currently 190.5, dropping down to no doubt try and pressure prices lower. Now you can see the effect it had back in late July, capping the market with a small double top. It is not long now till the long moving average drops into the frame, so I would keep a close eye on it, as the room for maneuver of this market is becoming quite restricted. In the bigger picture, there is currently no significant pattern development being undertaken apart from the previously mentioned neckline, Well, we had a weekly key reversal down last week, which just sort of failed, I suppose. That's about the only thing I'd say. The market seems reasonably happy at the moment to travel slightly higher, along and on top of the neckline and towards a greater bearish pressure that is coming in from above. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.